LTC Properties stock, ticker symbol LTC. This stock is up almost 7% on the year-to-date chart, underperforming the S&P 500. And on the 29th of April, LTC presented earnings with a miss on FFO, but a beat on revenue. Most people love LTC stock because of the dividends, and I understand why, with dividend yield at 6.6%, and of course the monthly payouts. In here we see the total returns in the past 5 years, including dividends. LTC stock only returned 4%, while the S&P 500 is at 108%, and this is including dividends. A significant difference if you ask me. And with the stock underperforming the S&P 500, it is the perfect time to do an analysis to see if LTC is a hidden gem. And I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does LTC do? LTC Properties Incorporated is a healthcare facility real estate investment trust. The company operates one segment that works to invest in healthcare facilities through mortgage loans, property lease transactions and other investments. Diving into the earnings, we see that net income was reported at 24 million, down from 32.9 million in 2023. EPS was reported at 0.56, also down big time year over year. However, FFO, one of the most important numbers here, is actually growing year over year, so this part looks good to me. And if we dive in a little deeper in the earnings, we see that last year there was a huge gain on sale of real estate, which led to a higher number of net income in 2023. So it's a bit diluting. It is actually looking pretty good. In here we see a few important numbers. To start with the investment grade, which is at 2C, which is not a good sign. I prefer A ratings here. However, the debt to EBITDA is looking really good at 5.5, which is perfectly in the range I prefer of 5.5 to 6.5 for REITs. And in here we see the US senior population growth projection. It is expected that all three groups keep on growing in the coming years, which is key for LTC Properties. And LTC has two main segments: skilled nursing, representing 47% of the total investments, and assisted living, representing 52% of the investments. And as of right now, LTC is active in 26 states, with 195 properties through 31 operators. To me, this diversification looks pretty good. Texas is by far the biggest in terms of geo breakdown based on investments, followed by Michigan and North Carolina. I prefer a maximum of 10% here, so the 15% with Texas is a bit on the high side, to be honest. And LTC is really proud of the consistent dividends, and I think it is pretty impressive they kept on paying dividends throughout the pandemic. However, it isn't growing anymore ever since 2017. And now that we know a bit more about the company, it is time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week, and also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue by diving into the fundamentals. LTC is a 1.5 billion market cap company. PE ratio is not a fair metric to use with REITs, so I'll be using the price to FFO instead. Right now it is sitting at nearly 13.4, indicating they might be undervalued. Later in this video I will show you my 3 price targets for LTC stocks, so make sure to watch until the end, because price to FFO is only telling a small part of the full story here. Revenue is at 199 million, and in this graph we see that revenue went up in the long run. To me this looks really good, especially for a REIT. The only thing is that during lockdown periods revenue was slowing down a lot. we see that margins are going up and down over a longer period of time. But the trend line is a bit more downwards, which is something that I don't like. Definitely keep an eye on these numbers. EPS is pretty much the same story as the margins, so keep an eye on this number as well. Analysis expect that in the coming years EPS will decrease even further. To me, this also doesn't look good. For the revenue, it is looking pretty interesting, with 5 to 6% growth expectations in the coming 2 years. To me, this is looking pretty good actually. Return on assets is sitting at 4%, which is a decent number for this type of REIT. Return on equity is looking great at 9%. And the most important number, return on invested capital, is sitting at almost 5%, which is again a decent number. But it is slightly higher versus the 5-year average, so that's the silver lining here. Current ratio is at 15, which is way too high in my opinion. This is definitely something to keep your eye on, because you want this number to be in the range of 1 to 3. And right now LTC has 860 million in debt. I prefer companies that can pay down at least a big chunk of their total debt with the total cash. LTC has 9 million in total cash, so they can't pay down a big chunk of their total debt. This is something that I don't like, especially in combination with the current ratio. So it is very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is going up in the long run, which is a great thing, but not really steady and consistent. Shares outstanding are increasing, which is very common for a REIT, since they increase shares to raise capital. When shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 6.6%, which is a great number. Annual payout is at $2.28 and payout ratio is at 86%, which is above the 75% average for REITs. The 5-year growth rate is sitting at almost 4%, which is a decent number. However, there are no consecutive years of dividend increases. And that's also reflected in this graph, where there is no dividend growth anymore since 2019. To me, this is not a good sign. And in this graph we see the expected dividends in 2024, 2025 and 2026. Of course, this is an estimation and can be highly impacted by results, but it gives you a rough indication. It's expected to stay flat from here as well. And overall these dividends look really interesting to me, but how about the historical returns? I decided to compare LTC stock with the overall market, in this case the S&P 500. Next to that I added GMRE and AHR. On the 5-year chart we see that LTC returned 4.5%, which is a significantly lower number versus the S&P 500, which returned 108%. And keep in mind this is including dividends. Both competitors are sitting around 25 to 30% return. On the 1-year chart it looks not good for LTC, with half of the return of the S&P 500, so again underperforming big time. Both competitors are also underperforming again. On the 6-month chart it is the same story, with LTC returning half of what the S&P 500 returns. AHR did a great job with a 24% return. On the 1-month chart it is finally LTC beating the S&P 500. However, both competitors did a better job again. So bottom line, LTC underperformed the S&P 500 in both the long run and in the short run it is also not too exciting. But could this be the perfect time to buy LTC stock? Well, let's check the 3 price targets that are created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 3, 5 and 7%, based on historical performance, their own outlook, but also because of the analysis. For the profit margin I'm filling in 38, 40 and 42. And for the free cash flow margin I'm putting in 50, 53 and 56. For the PE ratio I'm putting in 18 and for the price to free cash flow I'm putting in 10, 12 and 14. My desired annual return is 12.5% since I can get an easy 10% average annual return with owning an ETF. Right now LTC stock is around $34 to $35. I hit analyze and we see a lot of red numbers. And since this is a REIT I'm only focusing on the discounted cash flow value. We have a low price target of $23. We have a mid price target of $30 to $31 and we have a high price target of $40. And to me the mid price target is the most justified here, indicating that this stock is overvalued right now. Which price target do you think is the most justified here? Let me know in the comments down below. My final conclusion on LTC stock is that it is an interesting company. I think the niche focus they have could be interesting, but as we see with most medical REITs, it's a tough industry. Margins are decreasing and growth isn't really there. However, most fundamentals look pretty good, but both the credit ratings and current ratio in combination with the debt are a big red flag to me. From a dividend point of view, I do get a bit excited. The yield is great. Payout ratio is a bit on the high side, but nothing that worries me a lot here. However, there is no growth and that's the thing that worries me the most. From a value point of view, things also look pretty interesting. In my opinion, the stock is overvalued, but it could be an interesting play if the stock price comes down. For now I'm skipping this stock and keep analyzing them from time to time. But remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.